markets, we did see the bond market moving about 3.1 billion in terms of bonds that have been traded at the bourse. And looking at the interest rates as of now, what are the likely scenarios we expect to see in the coming months?
Well, I think what we need to really look at is what's the government appetite for borrowing currently. If you look at the government's target for borrowing, they have already more or less exceeded their domestic borrowing target. So all eyes are on government on how it will be able to fill into the foreign borrowing. And remember, tax revenues have also come down. We've also missed it significantly. So the only two avenues left where we really need to pay attention is that the shortfall in tax collection and the foreign borrowing window. The government has been very clear in trying to raise money from the foreign markets. We've seen the $600 million from the Chinese government, together with the tranche that also came from Europe the other week. So all this combined is going to fill up towards the foreign borrowing window. However, in case of any shortfall is when the government will now need to come in and borrow strongly in the market, local market, which we don't see that happening. We already feel like towards the close of the year, of the financial year for the government is already sitting in a much more comfortable place. And any pressure in borrowing could be borrowed towards the coming financial year as opposed to fulfilling any cash needs for this current year.
So Duncan, looking at the broader scheme of things, right now we are seeing banks already beginning to release their results. We did see Equity Bank release its results just the other day. They posted an after-tax profit growth of about 20%, which was quite significant, bearing in mind that in their full year results for 2015, they reported a 1% jump in their after-tax profits. What do you make of the recent results coming in from the banking sector in light of what's been happening in the industry where there's some form of confidence crisis?
I think what we are seeing in the banks that have released their numbers so far, it's very interesting that core EPS has gone up compared to similar period last year. If you compare year-on-year growth last year first quarter and this year first quarter, banks have really performed well in terms of core EPS growth. But when you dig further and look at the deposit growth and loan growth, both of them have slowed down. We've seen growth, but in a much more slowed manner. So this informs that we have to look a little bit about their deposit book and also their loan book. So I think what the banks are really performing well in terms of the top line level from net interest income, where they're really able to leverage on the high interest rate. We could see quite a strong growth of almost 37% from Equity Bank on net interest income. That eventually is what has really fed towards the bottom line. And what we expect for the other banks, I think the high interest regime which we saw towards the end of last year, which has also spilled over into the first quarter of this year, will actually be able to make the banks perform well when it comes to the interest income level. However, increased provisioning is something we also expect. We've seen quite a number also trying to increase the provisioning. This was very much the same case towards full year last year, but just a spillover effect into the first quarter of this year.
Interesting. And Duncan, now that we've talked about the banking sector, we've seen Equity saying that they are likely to go big in the DRC market. They did launch operations there just a few months ago. And we've also seen South Sudan operations actually facing some severe stress in terms of how they devalue the currencies. And moving into now this new market, what are some of the key challenges that perhaps the bank might face as they venture into the DRC market?
I think we need to really look at what is it in for the banks as they go regional. I think looking at the Kenyan market, we look to almost attain maturity in terms of the banking space. So banks are generally looking for extra headroom for growth regionally. And Equity picked up, for example, DRC as a growth frontier by picking up ProCredit. So with the numbers that have come in Q1, we haven't seen quite significant contribution yet from the regional businesses, and actually we could see the regional business actually bringing some anemic performance towards the overall numbers. So I think the regional businesses are yet to fully stabilize. Like what we saw in South Sudan, the devaluation of the currency it's in fact one of the impacts that most of the banks have felt, not just Equity Bank. But I think we need to give them a little bit of time to see that all of this is put in together for growth, because remember, when they go regional, there's a lot of consolidation that has to take place, understanding of the market also. So we might give them a year or two to see if the regional businesses will eventually contribute significantly to growth. If you look at the likes of KCB, for example, regional businesses are coming in as one of the strong lines actually for growth. So all the banks, Equity Bank included, maybe in the next 1 or 2 years, we could see them really consolidating their regional businesses for profitability.
Well, many thanks there, Duncan. Of course, always a pleasure speaking to you to get the latest insights on what's happening across the market.